Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Today, we're taking a look into the latest insights from, well, a major player in the digital commerce space. That's PayPal's second quarter 2025 earnings call. Our mission today is to really unpack the most impactful topics, translate some of that business speak into clear takeaways for you, and explore what these developments really mean for how you shop, pay, and interact with money both now and, well, looking ahead. The overarching theme, the narrative that really stood out from this call, it seems, is PayPal's ongoing fundamental transformation, moving from what was primarily, a pure payments processor to something much broader, a comprehensive commerce platform.
It's true. And what's particularly insightful here is just how significant these earnings calls are for truly understanding a company's strategic direction and the broader market trends they're responding to. This isn't just about reviewing past performance, right? It's about getting a direct view into PayPal's current health and, maybe more importantly, their ambitious vision for what's next. As you highlighted, the company isn't just articulating incremental adjustments. They're talking about a massive fundamental shift in their identity and their purpose within the global commerce landscape, which honestly has implications far beyond just their shareholders.
All right, let's unpack the big picture first then. What were the headline numbers for Q2 2025, and what's PayPal's stated mission for the, say, next few years? From the numbers, it looks like PayPal delivered its sixth consecutive quarter of profitable growth. That's quite a trend. Suggests a sustained focus on, well, disciplined expansion. Their non-GAAP earnings per share, which for our listeners basically means their core operational earnings, stripping out certain one-off or non-cash accounting things. It gives a clearer picture of their underlying strength anyway. That increased by a healthy 18% year over year. And on the revenue side, transaction margin dollars, specifically excluding interest on customer balances, grew 8%. This points to a pretty robust core business activity, doesn't it?
It absolutely does, yeah. When a company highlights profitable growth, it really signals a maturity in their strategy. I mean, they're not just chasing volume at any cost, which, we've seen in past tech cycles where hypergrowth often came at the expense of sustainable profitability. PayPal seems to be choosing disciplined expansion now, indicating they've found a way to not just acquire users, but to truly deepen engagement, and that makes their existing user base more valuable, right? Looking at their reach, total active accounts and monthly active accounts both saw a 2% increase. Steady user base expansion, which is important for long-term health. But the real standout for me was that transactions per active account, excluding their payment service provider business, grew 4%. That means people are actually using PayPal and Venmo more often, not just signing up and forgetting about them.
So not just more users, but existing users more engaged. That's often a tougher metric to move, right? What does that 4% growth in transactions per active account tell us about the stickiness of their platform, especially compared to rivals? And given that total payment volume, or TPV, the total value of all transactions processed, grew 6% to nearly $444 billion. Huge numbers, suggesting strong momentum. How critical is this engagement piece to their ambitious long-term strategic goal?
Oh, it's absolutely critical. That increased engagement means a deeper integration into users' financial lives, creates a more defensible position against competitors. And this brings us to the overarching strategic goal beyond just these solid figures. PayPal sees itself transforming from primarily a payments company into what they're calling a dynamic commerce platform. Now, this isn't just a new marketing buzz phrase. It's a visionary outlook that suggests the next 5 years will fundamentally change how people shop, potentially more than the last 2 decades combined. That's a big claim. Their strategy is laser focused on anticipating customer needs, whether that's for seamless online purchases, efficient in-store transactions, or even through emerging AI agent-driven shopping experiences.
That's a bold statement they made. Fintech is in its infancy, really emphasizes this long-term visionary outlook. But beyond the vision, what specific shifts might we see if PayPal truly believes we're only at the beginning? Are they hinting at acquisitions, maybe? Regulatory changes, or even new financial products that are completely off our radar now? What's the big unknown that makes this infancy statement so impactful?
That's an excellent point to probe. I mean, when they talk about fintech being in its infancy and transforming into a dynamic commerce platform, they mean connecting consumers and merchants in entirely new, personalized ways. Moving beyond just the traditional checkout button, they believe their two-sided open platform, meaning they serve both consumers and merchants, gives them a unique advantage, enabling them to innovate across the entire shopping journey. This vision suggests a profound impact on your everyday shopping experiences, making them more seamless, more integrated, and frankly, far more personalized. It implies not just paying, but discovering, interacting, completing purchases in ways that are maybe beyond our everyday experience right now, perhaps with much less conscious effort on our part. They're positioning themselves to be the kind of invisible infrastructure that powers this evolution, from anticipating needs to securing transactions.
Okay, so a big part of that transformation involves strengthening what they call their core branded experiences. What exactly does that encompass, and what progress are they making in these key areas?
Right. Branded experiences are basically all the ways consumers directly interact with the PayPal or Venmo brand when they pay. Pretty straightforward. This includes things like winning at online checkout, expanding their buy now, pay later, or BNPL offerings, which is huge right now, growing the Venmo platform, obviously, and scaling their omni-channel capabilities, bridging online and physical shopping. Collectively, branded experiences' total payment volume, or TPV, grew a very strong 8% on a currency-neutral basis this quarter. That shows significant momentum in these key areas, which are really the foundation of their future growth.
Okay, let's start with winning checkout. How are they improving that crucial online experience? What does conversion uplift actually mean for a merchant?
Well, their online branded checkout TPV grew a solid 5%, which is consistent performance. But the real story here is the conversion uplift they're seeing from their upgraded experiences. When a merchant achieves a higher conversion rate, meaning basically a larger percentage of website visitors actually complete a purchase, it's like striking gold for them. Seriously. They don't need to spend more on marketing to get more traffic. They're simply converting more of the traffic than they already have. This is absolutely critical for their bottom line. Translates directly into more revenue for the same effort. These upgraded experiences are rolling out now in the US, Germany, and the UK. Over 60% of US checkout transactions are already on this latest optimized experience. They're also strategically investing in specific use cases, like managing recurring subscriptions to encourage more frequent repeat use, aiming to make PayPal the default choice for all online payments. For you, the consumer, this focus on a smoother, more efficient checkout means online purchases just become easier, faster, and more reliable. Less hassle.
Okay, here's where it gets really interesting for a lot of people. Buy now, pay later, or BNPL. We've heard so much about BNPL lately. Lots of new players entering the market. How is PayPal positioned in this increasingly crowded space? What's their unique edge?
Yeah, it's definitely crowded. But PayPal's BNPL volume grew more than 20% this quarter, and the monthly active accounts using it climbed 18%. Those are strong numbers. But what's particularly striking from their report is that the average order value, the AOV, for transactions using PayPal's BNPL is over 80% higher than standard transactions. So this isn't just about offering another payment option, it's about enabling consumers to make larger, maybe more considered purchases. PayPal positions its BNPL as the most broadly distributed solution available almost anywhere PayPal is accepted. That's a huge advantage scale. Merchants can integrate it seamlessly, often at a lower cost and with less complexity than dealing with standalone BNPL providers. This highlights what they see as their key winning factors: unparalleled scale, ease of use for merchants, and clear value for customers who already trust the PayPal brand.
They gave a great example with ACE Hardware, didn't they? After adopting BNPL upstream messaging like showing the option earlier on product pages and offering a 0% APR promotion, ACE Hardware saw a 35% year-over-year increase in total PayPal sales. And even more impressively, their average order values for those BNPL transactions increased sevenfold. That's a truly massive impact on a merchant's business, isn't it?
It really is a sevenfold increase in AOV. That's transformative for a retailer.
Absolutely.
It showcases how embedded, flexible payment options can directly translate into significantly higher sales and, presumably, customer satisfaction. For you, the consumer, this means more flexible payment options integrated directly into trusted checkout processes, potentially enabling you to make larger purchases or manage your cash flow more effectively without ever leaving the familiar PayPal environment. It's about making those significant purchases feel more accessible, less intimidating, maybe.
And what about Venmo? It certainly feels like it's evolving beyond just, peer-to-peer payments. How significant is its role in this broader commerce platform vision?
Oh, Venmo truly delivered outstanding growth this quarter. Underscores its pivotal role in PayPal's strategy, for sure. Its revenue is up over 20%. That's its highest growth rate since 2023. And critically, total payment volume for Venmo also grew 12%. It accelerated quarter over quarter to its highest growth rate in 3 years. This impressive momentum, according to the company, stems from deliberate product innovations over the past year and some dynamic marketing campaigns designed to reposition Venmo from just a convenient P2P payment tool to an everyday commerce platform. They're not just facilitating splitting dinner bills anymore, they're aiming to be central to your daily spending.
I noticed they mentioned the Big 12 and Big 10 college distribution deals. That sounds like they're really leaning into Venmo's strong connection with younger demographics to expand its utility.
Yeah.
Smart move.
Exactly. Those deals are a brilliant strategic play, leveraging Venmo's inherent popularity with college-aged users. It's where they live, digitally speaking. They allow college athletes to receive payments through PayPal or Venmo, and crucially, enable campus spending. Places like bookstores, ticketing, concessions. This seamlessly integrates Venmo into the daily lives of a highly engaged, digitally native demographic. Pay with Venmo, TTV, was up more than 45%, and monthly active accounts using it for payments increased by approximately 25%. It's not just small, informal transactions anymore. Leading brands like Sephora, KFC, Taco Bell, Pizza Hut, they're now adding Pay with Venmo in their apps. Makes it even easier for users to spend their Venmo balance for retail purchases. This indicates Venmo is actively targeting a much broader commercial role, leveraging its strong user base for daily commerce, not just social payments. For you, if you're a Venmo user, expect to see many more opportunities to use it beyond just sending money to friends, integrating it deeply into your daily shopping routines.
Okay, beyond online, how is PayPal extending its reach into physical stores? Really trying to gain a greater share of wallet in daily spending.
Yeah.
They want customers to use PayPal for all their payments, not just online, right? That seems to be the goal.
That's precisely the goal, yeah. This is all about getting PayPal into your physical wallet and daily spending habits, not just your browser. We're seeing strong momentum with debit card TPV across both PayPal and Venmo. That grew more than 60%. Monthly active accounts for these debit cards also increased over 65%. They've added approximately 2 million first-time PayPal and Venmo debit card users in the U.S. this quarter alone. This shows a clear appetite from consumers to use their PayPal or Venmo balance for everyday in-person purchases.
And they've launched a new physical card for PayPal Credit too, correct? That seems like a key move, bridging the gap between online and offline credit use.
Yes, exactly. This new physical card for PayPal Credit is a significant step, a big deal. It allows users to access their credit line both online and for the first time in physical stores. This is huge because it also provides access to promotional financing offers, like, say, 6 months interest-free on travel purchases, directly at the point of sale in the store. This complements their existing PayPal Cashback MasterCard, which offers 3% back on eligible purchases. The data clearly shows that customers who adopt one of these card products transact more frequently and deliver higher average revenue per account. It's a deliberate strategy to drive deeper engagement across all payment touchpoints, making PayPal a true companion for all your spending.
Speaking of expanding their reach, their international strategy is truly compelling. What's particularly intriguing is the bold moves they're making internationally, particularly this PayPal Everywhere launch in Germany. It sounds like they're taking this omni-channel push global with some truly groundbreaking features.
They are, and it's a fascinating initiative, really ambitious. Following a successful U.S. launch, PayPal Everywhere expanded to Germany in June. And it includes some truly groundbreaking innovations tailored for the European market, like the first ever PayPal contactless mobile NFC wallet available on both iOS and Android, so you just tap your phone to pay with PayPal in physical stores. They also introduced a flexible pay later to go option for offline BNPL, meaning you could buy something in a physical store and opt to pay for it over time using PayPal's BNPL. Plus, they've integrated in-app cashback offers at over 2,000 stores there. To amplify this launch, they even brought back Will Ferrell for their largest marketing campaign yet in Germany, which, certainly grabs attention.
That's a big splash. Definitely gets noticed. And how has the traction been in Germany? Are they seeing real user adoption for these new features?
Apparently, yes. They've already seen over 3 million NFC enrollments in Germany, and they're reporting impressive engagement trends, with engaged users transacting at this 16 times per month. This early traction is very encouraging, indicates strong consumer interest in these integrated online to offline capabilities. They're on track to expand these PayPal Everywhere capabilities to the UK this year as well. This really demonstrates PayPal's ability to resonate in both online and offline environments, aiming for what they call every purchase, every time, everywhere. For you, if you travel, or if these features eventually come to your region, it promises a more consistent, more flexible payment experience across various merchants, regardless of whether you're online or in a physical store. Imagine the convenience, right? Having your preferred payment method work universally.
So what does this all mean for the ambitious PayPal World announcement? That sounds like a genuine game changer for global commerce, like potentially huge.
It absolutely is, or at least it aims to be. Digital wallets have become ubiquitous globally, right? Almost 3.5 billion people rely on them. But here's the kicker. The challenge is severe fragmentation. Imagine you're traveling abroad trying to pay with your preferred app, only to find it's not accepted. Happens all the time. Or if you're a small business, having to integrate with dozens of different regional payment systems just to sell globally, it's a nightmare. That's the real pain point PayPal World aims to solve. It's about breaking down those digital borders and making global commerce truly seamless.
So it's about connecting any consumer with any merchant globally. How exactly are they doing this, and what kind of scale are we talking about?
Okay, so PayPal World aims to connect any consumer with any merchant globally, seamlessly. That's the pitch. The big news is that 5 of the largest digital wallets in the world, PayPal itself, Venmo, Mercado Pago from Latin America, China's Tenpay Global, and India's UPI are coming together on this platform. This is a monumental undertaking in interoperability, like technically very challenging. It means a UPI user in India, for example, can click the PayPal button at checkout on an online store in Germany and complete the transaction using their familiar UPI wallet without needing a separate PayPal account or dealing with currency conversion hassles up front. This dramatically extends PayPal's connections from its current, 400 million customers to potentially over 2 billion consumers worldwide, all while maintaining existing merchant economics, meaning merchants don't pay more for this expanded reach. That's key. It's also built to be compatible with dynamic payment buttons that adjust based on user preference, stablecoins like their own PYUSD, and even future AI agent shopping.
That's a complex interoperability challenge for sure. But if successful, it truly simplifies cross-border transactions and even peer-to-peer payments on a global scale. It's about breaking down digital borders in a very tangible way.
Precisely. This could be a significant expansion of PayPal's addressable market and a major simplification for global commerce. For you, imagine traveling abroad and being able to use your preferred local digital wallet seamlessly, regardless of the merchant's location or their accepted payment methods, or sending money to family across continents as effortlessly as sending it to a friend next door. It promises to make sending money globally effortless and far more accessible, truly bridging what are currently fragmented payment ecosystems. This is a very ambitious bet on a more interconnected financial future, no doubt about it.
Okay, moving beyond the consumer-facing side for a moment, how is PayPal transforming its business-to-business payment service provider, or PSP, operations? I know they previously underwent a bit of a reset in this area, focusing more on value.
They did. Yeah, they previously made a strategic decision to sort of reset relationships with their largest merchants, prioritizing value and profitability over just sheer growth, which initially caused some pressure on their volumes, as you might expect. However, they are now saying they're on the other side of this transition. They have largely maintained their core customers and are now seeing Braintree TPV, which is their large merchant processing volume, growing again. They expect this acceleration to continue into the back half of the year. This shift was driven by investing in value-added services like their payouts offering, which goes beyond just processing payments. It solves more complex problems for businesses.
And what's an example of these payout services in action? How do they add value beyond basic payment processing?
Well, Hyperwallet, which is a key part of their payout solution, is used by top travel, mobility, and social commerce platforms to distribute funds globally, often to independent contractors, creators, gig workers, that kind of thing. A great example of its strategic impact is its role in the Big 12 and Big 10 college deals we discussed earlier. Hyperwallet provides student athletes with rapid access to their revenue share payments, which can be sent directly to their PayPal or Venmo accounts for instant spending. This indicates a clear move towards more profitable and strategic merchant relationships, providing essential, complex tools beyond just simple payment acceptance. It makes PayPal an indispensable partner for businesses with complex payment distribution needs.
And what about small businesses, SMBs? They are the backbone of so many economies. How are they being supported in this transformation?
Right, very important segment. For small businesses, PayPal is actively migrating more transactions onto their PayPal Complete Payments platform, or PPCP. This platform is essentially a one-stop shop. Gives SMBs easy access to their latest online branded checkout experience and new products like Fastlane, which we'll touch on shortly. Currently, over half of all SMB volume flows through PPCP, which is a notable improvement in efficiency and integration for them. They've also expanded PPCP into Singapore, increasing its global reach. Additionally, they recently announced an expanded partnership with Wix, a major website builder, giving Wix merchants access to PayPal's full suite of payment tools seamlessly integrated into Wix payments. For you, if you run a small business, this means easier access to more robust integrated tools and payment options, all designed to fuel your growth and streamline your operations, letting you focus more on your actual business. Now, let's try and connect this to the bigger picture of how they're shaping the future of commerce through innovation in things like agentic AI, ads, and crypto. Starting with agentic AI, PayPal was actually an early mover here. They launched the first remote managed customer payment servers for commerce earlier this year. They are actively partnering with major AI players like Perplexity, Anthropic, and Salesforce to create powerful new agentic commerce experiences. Imagine your personal AI assistant not just finding products for you, but also securely completing the purchase directly within the AI client itself, without you needing to manually input payment details every single time.
So an AI could become your personal shopper and even handle the payment. That's quite futuristic.
Yeah.
And maybe a bit mind-bending. How is PayPal ensuring the security and trustworthiness in such a new paradigm? That seems critical.
It does sound futuristic, but it's closer than you might think, and security is paramount, absolutely. PayPal is leveraging its differentiated Know Your Customer, KYC, and Know Your Business, KYB expertise, which is their deep experience in verifying identities and business legitimacy for regulatory compliance. They've been doing this for years. They also have access to the largest ecosystem of payment-ready wallets with PayPal World, as we just discussed. The implication here is that AI agents could become your personal shoppers, seamlessly finding products and completing purchases directly, with PayPal ensuring secure payment in the background. It's about making commerce intuitive and embedded wherever AI exists, building on decades of trust in payment processing. It could truly simplify the shopping journey, making it as effortless as having a conversation.
And how about ads? That might not be the first thing people think of when they consider PayPal, but it makes sense if they're moving towards a broader commerce platform, right? How are they innovating in that space?
Indeed, it's a strategic expansion, and it does make sense in that context. In the ad space, they launched off-site ads in Q2. This enables brands to reach consumers across the open web using PayPal's rich data insights derived from billions of transactions and purchase histories, anonymized, of course. Building on this, they introduced storefront ads, which is a new, highly interactive format. It allows consumers to browse, shop, and pay directly within the ad unit itself. Think of seeing an ad for a product and being able to complete the purchase right there without navigating away to a separate website. This truly blurs the line between product discovery and actual purchase, making the shopping experience more immediate, less fragmented. It's about turning an ad into a direct point of sale, leveraging their unique position between consumers and merchants.
Then there's crypto, specifically their PYUSD stablecoin. How does that fit into this future vision of a dynamic commerce platform? What problem is it really trying to solve?
Right, PYUSD, their stablecoin. It's positioned as a pivotal part of addressing significant pain points, particularly things like high fees and slow speeds in cross-border money transfers, which are a major friction point in global commerce today. Still surprisingly clunky. PYUSD offers a stable, reliable, and potentially more cost-effective alternative to traditional, often cumbersome systems. They've added the ability to earn rewards for holding PYUSD on PayPal and Venmo. They've expanded its availability on Stellar and Arbitrum blockchains, which are popular platforms for digital assets, and are actively collaborating with major exchanges like Coinbase, custodians, and payment partners such as Fiserv and MasterCard to increase its reach and utility. PYUSD is also slated to be a major enabler of the new PayPal World platform we talked about, acting as a kind of bridge currency for seamless cross-border transactions.
And they announced Pay with Crypto, powered by PayPal. That sounds like a really big step towards integrating digital currencies directly into everyday spending.
It is a monumental step, yes. Pay with Crypto, powered by PayPal, enables instant crypto to stablecoin or fiat conversion at the point of sale. This means if you hold, say, Bitcoin or Ethereum in a supported wallet, you can use it to make a purchase, and PayPal will instantly convert it to PYUSD or traditional fiat currency for the merchant. It supports transactions across more than 100 cryptocurrencies and popular wallets like Coinbase and MetaMask. Tapping into a global base of over 650 million crypto users, according to them, PayPal sees a big part of the future of commerce will be on-chain, powered by blockchain technology. And PYUSD is designed to power that journey, reducing friction and cost. For you, this could mean cheaper and faster international money transfers eventually, or the ability to use your crypto holdings directly for purchases with significantly less friction than ever before, potentially unlocking new liquidity for digital asset holders.
Okay, Let's shift gears a bit and dig deeper into PayPal's financial health, what the company expects for the rest of the year. Beyond the big strategic moves, the numbers tell a crucial story, don't they?
Absolutely. From a financial standpoint, transaction margin dollars grew 8%. That's a meaningful improvement over the past 3 years. This growth was driven by several factors: strong credit performance from their lending products, the continued success of their branded checkout, improvements in their payment service provider profitability, and of course, Venmo's outstanding growth. Non-GAAP operating income grew 13%, and their non-GAAP operating margin increased by about 130 basis points to nearly 20%. To clarify, a basis point is 1/100th of a percentage point. So 130 basis points means a 1.3 percentage point increase in their operating margin. That signals significant efficiency gains. This reflects what they call operating leverage. Think of it this way. As a company grows its revenue, if its operating expenses like rent or salaries don't grow at the same rate, then a larger percentage of that new revenue flows directly to profit. PayPal is achieving this by smartly reallocating funds from, say, less productive areas into things like product development, technology, and marketing, getting more bang for their buck. Their adjusted free cash flow for the quarter was $656 million, and they're maintaining their full-year expectation of $6 billion to $7 billion. Indicates strong cash generation.
Okay, but this raises an important question. Transaction losses saw an uptick this quarter. What's driving that increase? Should listeners be concerned?
Right. Transaction losses, the costs associated with fraud or uncollectible payments, increased by about 9 basis points this quarter. Now, for context, this means roughly 9 cents more per $100 processed compared to the previous period. It's not huge, but it's an increase. The company attributes this to 2 main factors. First, a normalization of loss rates after a period of unusually strong low losses last year, things returning to normal, basically. And second, some new product introductions. The full-year run rate for transaction losses is expected to be about 8 basis points. It's also worth noting that some newer products, like their debit cards, naturally come with slightly higher but expected loss rates as they scale. You factor that in. So this normalization simply means returning to more typical, sustainable levels after a period that was perhaps exceptionally good from a loss perspective. It's something they are actively managing.
Got it. So what's their outlook for the third quarter and the full year 2025? Are there any macro factors they're closely watching that could impact this guidance?
Well, following a strong first half, PayPal is actually raising its full-year guidance for both transaction margin dollars and non-GAAP EPS. That signals confidence in their strategy and execution. For the full year, transaction margin dollars are now projected at $15.35 billion to $15.5 billion, representing 5% to 6% growth. Non-GAAP EPS is expected to be between $5.15 and $5.30, which would be an 11% to 14% increase year over year. Pretty healthy. They also continue to project approximately $6 billion in share buybacks, indicating a commitment to returning value to shareholders.
And they've built in some flexibility for potential e-commerce slowdowns, which seems like a smart move given current economic uncertainties, right?
Yes, that's a crucial point. Prudent planning. The low end of their full-year guidance could absorb up to a couple of points of deceleration in e-commerce spending should macro conditions worsen. They are closely monitoring how tariffs and other trading frictions might impact global economic activity and supply chains. Acknowledging the external pressures, they also highlighted restructuring costs of $92 million related to workforce actions taken earlier in the year, and a significant 3-year plan to re-engineer their infrastructure, streamline operations, and migrate to cloud-based solutions. This long-term initiative is designed to increase speed, flexibility, and scalability, which is absolutely crucial for supporting their ambitious strategic shifts and reducing future operating costs. It's an investment in future efficiency. And let's connect this to the specific headwinds they discussed, like tariffs on Asian platforms, which came up in the Q&A section of the call. The management clarified that without the pressure from platforms and merchants in Asia due to these tariffs, their branded checkout TPV growth would actually have been 6% instead of 5%, so that indicates a measurable external impact. The good news, according to them, is that they are seeing less pressure from the specific headwind in July and expect stabilization going forward. While macro uncertainty definitely remains, the company is clearly focused on its internal strategic initiatives to drive growth, suggesting they feel more in control of their destiny through innovation and execution, rather than being entirely beholden to broader economic shifts.
Okay, we've reviewed the numbers and the strategy. Now let's touch on some specific questions that came up during the call, directly addressing key areas of interest for you, our listener.
Sure. A major question was about PayPal World and Pay with crypto, and whether these initiatives expand market reach even if they potentially come with lower take rates, meaning the percentage of a transaction they earn. The company clarified that both are seen as total addressable market TAM expanding, big opportunity plays. For PayPal World, merchants actually maintain their existing branded checkout economics. This means it's an expansion of reach to billions of new consumers with existing profitability rather than a concession on fees. That's important. And for Pay with Crypto, the expenses related to these transactions apparently come down significantly, making the net take rate, the profit they ultimately retain after all costs, quite attractive. This indicates a long-term play for increased volume and broader ecosystem value, rather than trying to squeeze higher fees on every single transaction immediately. It's about growing the pie for everyone involved.
Another interesting point was about merchant negotiations and the placement of the PayPal button. This sounds like a subtle but important shift in their strategy. How are they evolving these conversations with merchants?
This is a significant shift away from the traditional model, yeah. They are moving away from negotiating specific button placements on merchant websites like put our button first. Instead, they're pushing their Payment Ready API, which is an application programming interface, basically a set of rules allowing different software to communicate. They use it to identify customer preferences up front. What this means is when you, the consumer, are on a merchant site, the merchant system can ping PayPal's API, and PayPal will tell them exactly what payment method you prefer, based on your history and identity, assuming you're logged in or recognized. This allows them to personalize the experience and present exactly what the customer wants, ultimately driving higher conversion. This shifts the focus from just visual prominence of a button to an intelligent, data-driven experience, which could lead to better outcomes for both merchants and you, the consumer, by making checkout more intuitive and faster, reducing friction at that crucial moment of purchase. What's the status of the modern checkout initiatives in Europe following the successful U.S. rollout? We touched on this briefly. The U.S. rollout is over 60% complete, and the cohorts of users on the new system are indeed showing the expected uplift in conversion rates. So it's working. Validating the investment. They've begun rolling out these modern checkout experiences in the UK and Germany, with adoption expected to accelerate in Europe in the coming quarters. Apparently, integrations on newer systems in Europe are often faster, which bodes well for rapid expansion there. This implies that more seamless and feature-rich PayPal experiences, like those seeing success in the US, are very much on their way to international markets soon, standardizing the experience globally.
Okay, how should we think about PayPal's broader roadmap for expanding its brand offline and into more comprehensive financial services? It sounds like they want to be present wherever we spend money.
The core strategy here is to truly meet customers where they are, whether that's online or offline, and to become the preferred choice for every purchase. That's the ambition. They've seen impressive results already from this omnichannel push: 5 million new PayPal debit card users since launch, with TPV growth for these cards up a remarkable 75% in Q2. For these debit card users, they're seeing a 6-fold increase in transaction activity and a 3 times increase in average revenue per account. This tells you that once users adopt the card, they become significantly more engaged and valuable to PayPal. The Germany launch of PayPal Everywhere, with its NFC capabilities and offline BNPL, is showing similarly strong engagement. Remember those 3 million NFC enrollments and 16x monthly transactions for engaged users? This clearly shows a path to becoming a comprehensive financial ecosystem for daily spending, not just an online payment method. They're building a holistic financial presence for you, aiming to simplify your financial life across all touchpoints. Any quick updates on Fastlane and its impact on the checkout experience? Fastlane continues to roll out to their largest merchants, and it's showing a significant 50% conversion uplift for guest checkouts, which is huge for merchants losing sales there. What's also compelling is that 75% of new Fastlane users are either new to PayPal or were previously dormant users, indicating it's an effective way to re-engage customers and bring them back into the ecosystem without requiring a full login. It makes it super easy. The next big step for Fastlane will be supporting multi-processor environments in the coming quarters, which is crucial for their largest merchant partners who often use multiple payment processors. This is a long game for broader adoption, but the initial results are quite promising for improving guest checkout experiences and drawing users back into the PayPal ecosystem by making it exceptionally easy to pay.
Right. Finally, a listener asked about banks potentially charging for access to consumer data, which has been a topic of discussion in the financial industry lately. How does that impact PayPal, given their reliance on data for their services?
Yeah, good question. PayPal stated unequivocally that they are big supporters of open banking, which generally promotes the sharing of financial data securely to foster innovation. More importantly, they clarified that the changes are just immaterial to their business. That was the direct quote, essentially. They do not expect to be significantly impacted by any potential charges from banks for data access. This suggests that PayPal's business model and its ability to access and utilize the data it needs are not significantly reliant on these specific aggregation services that banks might be looking to charge for. They appear to have direct access or alternative methods for the data they need to power their services, ensuring their operations remain unaffected. Seems like a non-issue for them.
Okay. Wow, what a fascinating look into PayPal's strategic shifts and their vision for the future of commerce. It's clear they're not just sitting still, are they? They're actively trying to shape how we all interact with money and shopping. From online branded checkout to global digital wallet interoperability, and even into the future of AI-driven commerce. It's a lot.
Indeed, it really is. If we connect this to the bigger picture, it underscores how rapidly the financial landscape is evolving, with companies like PayPal trying to bridge traditional payments with new technologies like AI and crypto, while also tackling that huge problem of global fragmentation. The emphasis on interoperability and seamless experiences could fundamentally change how you buy and sell, no matter where you are in the world. It's a strategic move to future-proof their business by making themselves indispensable across an ever wider range of transactions.
A great point to mull over then. How quickly will these future of commerce elements, things like AI agent shopping or truly universal wallet interoperability, become part of your everyday reality? Something to think about. Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.